GM, good morning. Welcome to the Milk Road Show, the daily crypto show for people who hear CPI print and immediately check crypto prices. I'm your host, Jay Hamilton. It's Wednesday, March the 12th, and we are live on YouTube and on Twitter. If you guys are here, give me a what's up in the comments. Great to have you guys surviving through these difficult days. Now, this week is all about answering one simple question on the show. Are we in a bull market or are we in a bear market? And where do we go from here? Monday, we talked about the 9 to 12 month bear case with Michael Nadu from the DeFi report. Yesterday, we had Felix Joven from Blockworks on the show where we talked about his short-term 3 to 4 month macro bear case. And today we've got Kyle Reidhead, head of research at Milk Road Pro and co-owner of Milk Road, to give us his take on where we are in the cycle. Now, here's what you're going to notice. There is no consensus. That's because right now we're in a period of unprecedented market uncertainty, a lot of it being caused by Trump and the change in regime in the US economy as he takes his next term. Now, more than ever, now is the most important time to listen to different perspectives. It's also very important that everybody knows everyone we talk to is still long-term bullish. We're still got a long way to go, folks. So please, please, please stick with me. Now is when people rage quit, when they leave. Don't make that mistake. Stick around because no matter what, whether it's in a few months or whether it's in 12 months, we are going to have another bull cycle. So no one said getting rich was going to be easy. Don't leave, guys. Stick around. We're going to make it together. And if you need some support during this time, we got a Telegram group where you can speak to me directly every day and the rest of our team. So hit the link in the show notes to join our Telegram group. Today's episode is brought to you by Definitive Advanced Trading on every chain and Coinshift, powering top crypto treasuries with their yield-bearing stablecoin CSUSDL. Without further ado, Kyle, welcome to the show.
What's going on, Jay? How you doing today?
Yeah, I'm doing well. You know, it's one of those weeks where we're all surviving. Let's jump right in. In your view, are we in a bull market or a bear market?
I mean, we're definitely in a bull market. If you want to talk about like the technicals of it, it's not clear what even a bear market or bull market is. In the equities market, it kind of is. Like I think a 20% pullback is considered a bear market. We're not there in equities. So like technically we're not in a bear market. In crypto, we don't really have an exact amount. A 20% pullback in crypto happens like every day. And so like we can't count that as a bear market. I think though, in general, when people think of what a bear market is in crypto, it's these things that we have typically every 4 or so years where it's like 12 months of price goes down and down and down for 12 months straight, right? Like that is when I speak of bear market, that's what I'm speaking of. And no, I don't think that we're in that right now. And I don't think we're going into that. But I think we've got to just be clear on what a bear market is, because some people will say like, oh, growth is down to whatever. And so that means we're in a bear market, we're in a recession, right? But like, it's just like, it's these technical terms. And so ultimately, I don't think we're going to 12 months of down only, where not only does price go down, but people start leaving the industry and things collapse and we fall apart and no one talks about crypto again. Like that's not happening right now. I don't think we're in the 2022 scenario or the 2018 scenario or the 14 or 15 scenario. I don't see that as what we're in right now or what we're heading into.
Okay, let's take a look at some of the charts because, as you said, using the term bull or bear market might be a bit difficult to understand exactly what is meant because people might mean different definitions. When we look at the charts, what are you seeing right now when you look at where we're headed and where we are right now?
Well, let's start here. Let's kind of like pull back just a little bit. And I think in times like this, when prices go down a lot, there's, as you said at the beginning, chaos and uncertainty in markets. People stress out. Anxiety kicks in, emotions kind of take over. We do stupid stuff. And in those type of moments, whether it's in markets or anything else, the best thing you can do is kind of understand, like, why are we here? What happened? Why am I having this moment of anxiety? Why are markets in chaos? And so like, let's kind of like bring the tape back a little bit and just first look into like what brought us to this moment that we're in right now. Cause I think that'll give a little bit of clarity to everybody. And so I want to date back to December 7th. We put out a pro report. I think I might have came on the podcast too and said this, but we said we think a 30% pullback is near. And the reason why we said this had nothing really to do with crypto, although at the time, like things were getting pretty euphoric, I would say, and sentiment was a little bit crazy. So you could have also said it from that. But the real reason we said it is we had a pullback, a pretty major pullback in global liquidity. And at the same time, the dollar was extremely high coming off Trump winning the election. I think it was up to like, what was it, 111 or 113 or something. Rates were and still are too high. Inflation had been steadily rising. Growth remained pretty strong at the same time. And then unemployment was like not terrible, still fairly stable. And so the Fed was in a place where they couldn't really lower rates, right? And they didn't need to lower rates. They could do whatever they want, but they didn't need to. And so in our opinion, even though all that happened, prices continued to go up, and Bitcoin ran from, what was it, 70K or something, all the way up to like 100 and close to 10K, right? In that time frame. So during November, during December, and we're like, well, this doesn't make sense. The macro isn't saying that we should be in this price goes up, but it was all about the hype of Trump winning the election. So it wasn't real price appreciation, right? It was what did Felix call it yesterday? Animal spirits, right? Or maybe that was Michael.
Michael.
Yeah,
Michael.
It was animal spirits that brought us there. And so we were like, okay, we need to reset. So interestingly, today we sit at exactly a 30% pullback from when we wrote that report and sent out that message. Now, to be clear, the world looks a little bit different than what we were expecting when we said a 30% pullback would come. But also interestingly, I'm very surprised that after all of what's happening, we're only at a 30% pullback in Bitcoin. That means actually it's holding up quite strong, right? The NASDAQ is only, 10% or something right now. So like overall, like I know there's a lot of chaos and there's a lot of just like uncertainty in the markets, but like ultimately, this is kind of what we expected, just with a lot of chaos on Twitter and in the news and in these crazy headlines that make it feel so much worse and so much harder than it is. But like in December, when things weren't that bad, we said, hey, we expect 30% pullback here in Bitcoin. Now, I know that a lot of people hold altcoins and other things that are down way worse. Ethereum's down, 50%, maybe a little bit more. Solana's down 60 something percent from its like extra high that it got because of Trump. So like things feel worse, but actually like it's kind of really not as bad as it seems. Now it could get worse, right? Michael's episode on Monday was really good, his bear market thesis. And so like, I'm not saying that we are out of this whole situation, but this is kind of what was expected, though there's just a little bit more like flash that's been added on because of Trump and the administration. So I'll start there, and then I can get into why I think that's all happening or what's going on. I don't know if you have any other questions or clarifications on that real quick.
No, I think so. TLDR, if I can do this to you this early in the show, because this is my job to wrap things and summarize, you think we're in a pullback / maybe short bear? Is that kind of, if I could define it?
Yeah, let's get to it. First, show the charts you were about to show. I just want to walk people through. Here's what we were saying, and here's where we sit today. So at the time in December, we said, okay, liquidity has pulled back. And that did, from basically when we wrote that. Look, it pulled back. You can see it in the green here up on the screen. It pulled back all the way, and this is, by the way, a 3-month lead, I believe. Yeah, 3-month lead. And now global liquidity is starting to rise again. Okay, and so we've sort of already priced in that liquidity pullback. And now, okay, what happens next? Well, liquidity is on its rise, which is exactly what we thought might happen. If we go to the next one, the dollar, which I said was way too high. Well, as you guys know, over the last week or 2 weeks, it's had one of its fastest drawdowns in recent history. And it now sits at around 103. And so a huge loosening of financial conditions as a result of that. Likely still has some ways to go. If we go to the next one, we have the 10-year treasury yield. This is interest rates. This is the market around rates, though, not the Fed fund rates, but the market around those rates, on a longer time frame. And that is still quite high. But at the time when we said this, it was sitting at 5. And that is extremely high. And this is the key chart to remember here, because I'm going to talk about this a lot in just a second as we go into what happens next. It is down to 4.2. So it's lower, but still needs to go much lower to really get to the other side of what I'm thinking here. And then the last one is we talk about inflation. A print came out today. We were lower than expectations, which is great. So we hit 2.8% CPI. It was meant to be, or expected was 2.9%, and core was also down. So like, not what we wanted, but like, I mean, it's what we wanted. It's lower. We want it to be much more. If we look at true inflation, which is more live data, a lot of this is because of tariffs and things, and the chaos that's gone on markets. Inflation has absolutely tanked, and so I expect March, which is again looking in the CPI numbers, we're always looking backwards, so we're looking back. So those are the numbers of January that we got today, of February that we got today, and then the next ones that we get will be of March, right? So we're always a month or so behind lagging, whereas Trueflation is live. So I prefer that data point. So inflation is, according to Trueflation, much, much lower. So all the things we kind of said we wanted to see and all the reasons that were causing this pullback in the first place are beginning to get fixed, let's call it. But we're not quite there just yet. And so to answer your question, I don't see that we are going into a 12-month long bear market. I think that this is short-term pain, which is exactly what Trump has been calling this, and Bessent has been calling this, short-term pain for long-term gain. I'll get into what's going on there in just a second, but ultimately I think we needed to go through this. And I know this one feels harder and it feels worse. And Trump is definitely adding more, let's say, fire or gasoline to the fire. But ultimately, I think that's actually a good thing for the long term. And so this thesis I've talked about of maybe an extended cycle, or as Felix said, maybe it's just not a cycle anymore, right? We've kind of grown up in terms of crypto. We talked about this. It'll come out on Saturday's podcast, but the dynamics of this crypto industry are really changing. And what we remember from back in the days, we really have to think differently in terms of the metrics we look at, in terms of the historical performance. Things are really changing now. And I think we're starting to see that. And so I think this either extended cycle or just maybe we stop using the word cycle makes a lot of sense here. But I do think by the end of this year, we're much higher than we are today, and very likely much higher than we were when we started to pull back in December.
Mm-hmm. Okay. Let's, as you mentioned, what is causing so much of this is Trump and the shift that the new office, his new cabinet is taking from the Biden administration. A big shift from a regulation-based economy and an economy that was really pumped up by government spending to an economy that is led by the business cycle and by private markets. Let's talk about what is Trump's master plan. Is he causing this? Does he want this pullback? Let's get into that.
So first of all, I would say I don't actually think Trump is the big cause of this. I actually think it's just the global liquidity, right? That dip. And we expected a 30%. We got about 20 something percent. And then the chaos ensued over the last 2 weeks, and we got an extra 8%, right? To bring us to the 30 that we're at now. Now, maybe we continue to go lower. We'll talk about that in a second. So ultimately, probably 60, 70, 80% of this pullback is just liquidity. And then it's just been added on an extra 20% or so in terms of the whole share of this pullback from Trump and the chaos. And so I know everyone's kind of kerfluffled, let's call it right now, with what Trump is doing. I don't know that that's the big reason for this pullback. The pullback was already expected because of liquidity, as we showed on that chart there. This is just adding a little bit of fuel to the fire, but it's not the main cause, in my opinion. Now, that being said, things may get worse, and that's likely due to Trump. And not just Trump. Let's call it the Trump administration. This isn't Trump's master plan. It is his whole team of very, very smart individuals like Scott Bessent on the Treasury side. It is their plan. And I know that sounds weird that it is their plan to tank the markets, but hear me out here. There is a reason why they're doing this, I believe, and it's actually very good for the people of the United States. And so as much as we're mad at him right now for what he's doing, I think there is actually a rhyme or reason to it, and I think it's actually quite smart. So the big thing to understand is that when Trump took office in January, he had a very big problem that he had to deal with from the previous administration, and not just previous administration, from his previous tenure as well. We have a shit ton of debt in the United States. And unfortunately, in 2025, something like a third of it, or something close to that anyway, 9.2 trillion is the actual value, has to be refinanced this year. And even more, unfortunately, about 70% of that, I think around 7 trillion, has to be refinanced in the first 6 months of 2025. Okay, so $7 trillion. They have to refinance. And as I just mentioned, back in late December, early January, the 10-year was sitting at 5%. Okay. They cannot refinance $7 trillion at 5%. That would be suicide for the US economy. Okay. And for this debt spiral. So they really, really, really need rates to come down. Okay. And in fact, here's up on the screen here, we have the average interest rate on the treasury debt, which is lower than around 3.5%. If we were to refinance at 5 this much, this would go up so high on our interest payments we already can't afford. They're going to just accelerate at such a fast rate if we were to do this. So the option here is we would just refinance at high interest rates and just say screw it and deal with this in a year or 2 years or a few years down the road. But that's going to be a really big problem. And so the other thing we can do here is, well, let's try and get rates down. Now, the problem, as I just mentioned at the beginning of this episode, is the Fed doesn't need to lower rates. Remember, the Fed and the Treasury, as much as I think Felix was saying Trump and Powell go for lunch every week, they are not the same entity. If the Fed was just part of the US government, they would just lower rates, refinance, and then raise them again. But they are separate entities technically. But of course, there's probably a lot of things going on in the back end together. But ultimately, the Fed's job is to maintain inflation and to maintain unemployment. And at this point, and hope for growth in the US economy, right? But at this point, all that was kind of good. Growth was strong. Inflation wasn't too bad and is actually beginning to rise, which means that they really probably shouldn't lower rates. Unemployment was not at obscene numbers. So again, they didn't need to lower rates. And in fact, they probably shouldn't lower rates where that environment was. And so Trump can't just call up Powell, and say, hey, lower rates, we got to refinance. So what can he do? Well, force a recession.
Tinfoil cap time.
Right.
Okay, conspiracy time. What's Trump doing?
Call this a conspiracy, call it whatever it is. But if I'm sitting in Trump's seat and I'm like, shit, I cannot refinance this at this price and I can't get the Fed to lower rates. Well, what can I do? I could probably lower the 10-year. I can probably lower the dollar. I can probably take inflation. How do I do that? A recession. Now, do I really think Trump's going to force us into a recession? No, that would be a terrible idea. There's no way they're thinking that. But can they do a fake out here? Can they make recession expectations really come up? Can they create a growth scare? Absolutely, they can. It's actually not that difficult. It's all part of their original plan anyway, right? If I were Trump and I wanted to create a growth scare or a recession, let's say he's going to force us into a full recession, which I really don't. What would I do? Well, I'd release the hounds, aka Elon Musk and Doge, to go and fire tens of thousands, hundreds of thousands of people, right? And while he's doing that, I would tweet out and say, hey guys, Elon, you're doing a great job. You've already fired 100,000 people in the federal government. You got to do more though. You need to do more. What do you think that's going to do to unemployment? Skyrocket, right? Of course it's going to skyrocket unemployment. What does that do for the Fed? Makes them have more leverage to lower rates, right? It also slows down growth. It slows down inflation, right? So even if the Fed doesn't do anything, it does all the other things that they need, right? Okay, so there's one thing. What's the second thing I would do? Slap a bunch of tariffs on the economy, slap a bunch of tariffs on their main trade partners, cause a global trade war. Now, look, whether this is all part of his master plan to lower rates or not, I'm not sure, because there's also a case to be made that tariffs are actually really good if you want a for America, America first economy. When you throw tariffs on, I don't know, whatever you want to say, washing machines or steel or whatever it is, ultimately what that does in the long term is actually brings more creation or manufacturing of those things in the US. So you don't have to pay the tariffs. And there's precedent of this. This happened last time Trump took over. There was a bunch of the things that he put tariffs on where they just ended up building it in the US instead, right? So maybe this is just long-term strategy for America first, but also what's the impact of this right away? A growth scare, right? Inflation going down potentially. There's fears that it might also go up and tanking the dollar because it looks bad in the US. That's kind of what he might want to actually happen here, right? Then if I think of a third one, there was that battle with him and Zelensky on a national TV. Look, Trump, we know, is a bit of a loose cannon, so maybe that just happened. Or maybe he wanted some geopolitical uncertainty to be put out in the media and do that public so that we go into a risk-off environment. I think Felix talked about this. One of the best things we can do to lower inflation, to lower growth, to lower the dollar is to tank the stock market, right? And what's the thing that Trump keeps saying and Besson keeps saying? I'm not even paying attention to the stock market right now. Don't even care. By the way, Jay, you're doing a perfect job at nailing these headlines as I'm speaking.
Thanks.
I don't know how you're doing that, but nailing it. So for those watching right now, like, you should be enjoying this. This is a masterclass. So you can hear Trump saying, hey, I'm not even looking at the stock market, right? You can hear Bessent saying, we got to do a detox for the market, right? We're in the Biden economy and it's going to take 6 months to get into the Trump economy, right? And so, 6 months from from January when they took over, well, that's June. That's a couple months from today, right? So what I kind of think is happening, and call it a conspiracy, don't call it a conspiracy, whatever they're doing, whether it's chaos and he doesn't know what he's doing or this is all a plan, doesn't really matter because it's working. Because growth is absolutely plummeting, or at least the expectations of growth are plummeting. The dollar has just tanked, right? Rates are starting to come down. Inflation, as we saw as a result of all that, beginning to come down. So like, whether conspiracy or not, the things he's doing are actually kind of working. I mean, if you've seen the amount of layoffs, the spike that we had was as big as we had in almost like in 08 and not as big as obviously COVID, but like we're seeing a massive spike in layoffs recently. And these are really around the government, I think. And so ultimately, like, I think the plan kind of is working here because what does this mean? If I think about what's happening here, they are basically resetting the business cycle in the middle of the business cycle, which like is very weird and very odd. As you guys know, we base our thesis around the business cycle, right? A big part of our investments and things is around the business cycle kind of going up, the global liquidity going up. And somehow in the middle of this all, they're almost resetting it, saying, okay, we're going to bring inflation back down. We're going to bring growth back down. Looks like Jay has gotten kicked out of this call. So someone in the chat, let me know if you can still hear me and if Jay's gone or what's going on. Because if so, I'll just keep talking until he comes back. But if you guys in the chat can let me know, that would be great.
Kyle, you jinxed me, man. You complimented me and my internet crashed.
I was wondering what was going on there.
Holy jeez.
Right.
I'm back.
All right, you're back. All good. I just noticed. Anyway, basically what I talked about is that it feels like they've reset the business cycle kind of in the middle of the business cycle, which to me means, as Trump has said and Bessent has said, short-term pain, right? We're going to reset this business cycle here. But ultimately, long-term gain here, because think about this. The last time we started from the low of the business cycle, right? Meaning and I don't mean a full reset of the business cycle. Okay. So like, don't use that word like exactly, but essentially, typically when you have growth going down, when you have inflation going down, when you have the dollar going down, all these things, it's at the beginning of the business cycle. The last time we had that, Bitcoin was at 20K. Now we're basically trying to like do that really quick here. They're trying to get this growth scare to kind of almost reset the business cycle. And Bitcoin's sitting at what, 80K? Maybe we go down to 70K. And so now we're going to get a full other almost bull market, let's call it, with potential for liquidity and the ISM to pick up and growth to pick up and rates to come down. And yet we're doing it at the base of Bitcoin at 70,000 instead of the base of Bitcoin at 20,000. To me, I'm like, holy shit, this is actually a really good opportunity and maybe even a better scenario than what we originally had, right? We originally were like, okay, we're more than halfway through this cycle. We've got a little bit left here. Maybe by Q4 it's over. Maybe we stretch into 2026. And so it's like, okay, Bitcoin can go to, what did we say, like 150 and whatever. But now all of a sudden I'm like, okay, well, what happens when we almost reset and restart things from 70K, right? Instead of 20K. To me, this is actually quite interesting. And like, maybe this means we extend this cycle, or let's call it this bull market, much longer into 2026, which would make sense because what Trump is trying to do is fix the economy now, go through the pain now, so that things are good for the midterms and maybe good for the rest of his presidency, right? And so like, I actually see this as a bit of a, like, things are greener on the other side here. And maybe we actually get a better bull market, because the other thing to add to this is, if we do extend here and like we start to pick up second half of this year and even more into next year, well, that also gives more time for the new regulations to come into practice, for institutions to start launching and buying and allocating. Like, we were sort of racing between bull market ending end of this year and hoping to get regulations in time. And it was looking like, well, we probably won't get all that until the bear market starts. And now I'm like, well, wait a minute, we might get all that at the same time. So what does that mean for this bull market? And so I actually, as I think through this, like, look, don't get me wrong, there's still some pain here, but I actually think maybe this is actually a really good scenario if it all works out. Look, if this chaotic situation that Trump is doing does lead us into recession, these assets are going much lower. That's for sure. But right now, we're kind of holding fairly strong here. And so we'll have to see how things play out. But ultimately, I don't think this is going to be a 12-month situation. I think it's going to be fairly short. And then we'll kind of see where things go from there. The other thing to keep in mind here is markets are forward looking, right? And so have we already priced in this whole situation? Have we already priced in recession? Not yet. I think we'd have to get down to 20% in the NASDAQ. But like, have we already priced in most of it, right? And will we chop here? Maybe we'll go a little bit lower. And are we waiting, as Felix said, for Trump to just say, okay, green light, we're good, markets are back, we're not detoxing anymore? Or will markets actually be forward looking and price that in ahead of time, right? Oftentimes they do. And so, if we look at how fast this dip happened, it's extremely fast compared to other dips. And so I find it hard to believe that we go much, much lower here, and more likely, and I don't think it's a V-shaped recovery, let's say. But again, it just feels like maybe we've priced in the bulk of this so far.
Okay. I love it. I love it. It's nice to get a little bit of bullish vibes on the show this week when we've had so many bearish episodes. I want to get your take, Kai, on where you think the bottom is. Like, is this the bottom? Do we have further down from here? And then I also want to talk about like what do you do with your portfolio? Like, are you buying? Are you selling? How do you navigate these types of because these are when most people make the biggest mistakes. But before we do that, we just take a moment to hear from our sponsors who make this show possible. If you're only trading on centralized exchanges, you're not going to make it. The best traders know the alpha is on-chain. Founded by Coinbase alums, Definitive lets you trade any token on Solana, Base, and every major chain, all in a single platform. What makes Definitive different is its advanced order types. You can execute limit, TWAP, and stop loss completely on-chain. Get the best prices on every chain as your order is routed instantly through every DEX and liquidity platform with up to 19 times lower fees. Trusted by funds, DAOs, and the milkman himself, Definitive lets anyone trade like a pro. For our Milk Road listeners, you get zero trading fees on your first 25,000 in volume. Upgrade your trading at milkroad.definitive.fi. Today's episode is also brought to you by Coinshift. Don't just hold basic stablecoins. Earn yield, all without compromising security. Backed by regulated real-world assets and secured with institutional-grade risk management by our friends at Stakehouse Financial. Put your treasury to work, earning native yield and protocol rewards. Built by the team behind Coinshift, which is trusted to manage over $1 billion in business treasuries on chain, including Aave, Gitcoin, and hundreds of leading institutions. See why Coinshift's new stablecoin CSUSDL is gaining traction at Coinshift at milkroad.com/Coinshift. All right, welcome back to the show, everybody. Kyle, how long is this pain going to last? Where is the bottom?
The crystal ball that we wish we all had. Look, I don't know. Maybe we've bottomed. I would imagine probably not. I don't know if we have the charts up, but where I'm kind of looking at prices is if you're looking at altcoins right now, probably no need, right? None of those charts make any sense anymore. The only one really is I'd look at Bitcoin, right? Still has some good structure to it. And I'd look at the NASDAQ. Now, Bitcoin currently sitting at whatever it is, 80K or something right now as we record this. It dropped below its support level at, let's say, 90, 91. And it's kind of just sitting in no man's land right now. And so the next support level for it is like 71, 72, so like low 70s. I wouldn't be shocked if we hit that, right? Now, that's not that much lower. And so like, do you need to go sell everything and be into cash and wait for that? Like, I probably wouldn't, because we don't really know if it's gonna reach that. The NASDAQ, same thing. It has a support level it's kind of sitting at right now. I think it's up on the day, at least last I checked. But I think down to like the mid, I think it's 18,000s. That's the other one that I'm kind of looking at for its support level. If it broke, if either the NASDAQ or Bitcoin broke below those, one would be an incredible buying opportunity, but two would also maybe make me rethink my thesis on bull market or bear market. Right now, we're still fairly high above those. We need to go another, I think it's like 5 or 10% on the NASDAQ. And then that would be another, whatever it is, 10% or something in Bitcoin, maybe a little bit more. And so we haven't hit those. I wouldn't be shocked if we did touch those. I would imagine there's a lot of buying support there. But ultimately, like, who knows, especially in a scare, like a growth scare, then it's hard to say, right? And so one, I think we could go lower. But I wouldn't be waiting for it, right? Like maybe we're already priced in, maybe it's done. How long does this take? This was a pretty steep collapse. And so I think a lot of people got burned, which generally means this is going to take a little bit to get some momentum here. Even if good news started happening right now and price started to go up, I think you'd have a bunch of people that are ready to sell, right? And they're just like, oh shit, I screwed up. I should have sold. Like, and as it goes up, they're going to sell at 90 and then they're going to sell at 100, whatever. It's like, it's going to be a bit of a struggle to get up to the previous prices, right? So I think that's key. And then ultimately, like, I don't think we're through all the bad news yet because we don't see rates low enough, right? We need to see the 10-year go a bit lower into like maybe 3.5 or like into the threes at least, and we're not there, which means they're probably going to step on the pedal a little bit and try to make things worse. Now, will that happen? I'm unsure, but I think that's kind of where we're at here. And ultimately, CPI usually lagging data, growth lagging data. Like, remember, this isn't all on-chain data where you can see it live. This is like every month we got to wait for the results of these numbers. And so it takes a few months for these numbers to come out for the Fed to be like, oh yeah, inflation is down, because they don't just read trueflation, or, oh yeah, growth is down. Like, you know what I mean? Like, it takes a bit of time for the numbers to come in. And so like maybe it's like 2 or 3 months before we fully bottom, or at least just before we get out of the chop, right? Like, again, maybe we've bottomed and we're just going to chop around for a little while, right? But at this point, I'm not loading up on risk. I'm not full risk on. I think you don't want to be fully risk on yet. We want to wait until we get to the other side. There's no point in trying to catch a falling knife. As much as I'm still in the belief that there's a bull market, it doesn't mean Michael's scenario is wrong, right? There's just a chance, right? And I don't know what that chance is, whether it's 70% bull market, 30% what Michael's saying, or it's somewhere in the middle of that. And so like you don't want to go full risk on and buy dog with hat today, right? Because we think we've bottomed. That's not the play. I think now is a good time to start dollar cost averaging into stuff if you weren't. Back in December, I was saying I wouldn't be buying at these prices right now. I just don't think it makes sense, mainly because I had bought a lot in the early days of the bull market. But if you're someone who was buying up top there and you have a high cost basis on Bitcoin or Solana or whatever, like, now's a pretty good time. And now, would I throw it all in today? Probably not. I'd probably do this over the next little bit here, the next few months. And maybe you'll get some here at 80. Maybe you'll get some down at 70,000. Maybe you'll get some at 90,000. Like, in the end of things, like in the grand scheme of things, I think all this is a great buying opportunity. If we go below 70, I'm backing up the truck and I'm mortgaging that. No, I'm kidding. I'm not going to do that. But like, I feel like those are insane prices if you're getting below 70 in Bitcoin.
In Bitcoin. Okay, yeah. So
one more thing. The other reason why I don't think you should be fully sidelined, and I don't think you should be like fully scared, and I don't think you should be fully risk on is, one, probably more chaos to come, as I said. But two, remember that all the things that I just mentioned about Trump, they can all flip in a second, right? Like, he can stop Elon at any point he wants, right? And not to mention, like, at some point, the work he's doing is going to sort of fizzle out a little bit, right? Like, he's actually not able to fire all these people. He just can only make recommendations to Congress to fire them. And like, the easy ones were the fraud that was happening in the government. So like, the first, tens of thousands that are getting fired here that are just, they're not doing anything. And we're stopping that money. Like, okay, those are easy to let them go. But there's a bunch that like he might suggest, oh, they're not efficient enough. And Congress like, well, too bad. We're going to keep that, right? Like, it's not going to be this scenario. Like, he's not going to stop all and fix all the government's problems, right? But at any point, Trump can also say, okay, Elon, that's enough. Come back, right? So that can happen. And that would change things pretty quickly. He can also just turn off all the tariffs. Yesterday, he turned on tariffs to Canada, like, was it doubled them and then turned them off? I saw a chart the same day yesterday. Yeah, I saw a chart yesterday. It was like, I think in history, this is the first intraday tariff chart ever. And it was like tariffs at this and then tariffs back down here. And I was like, what is going on? So remember, if he just turned those off, well, boom, there's a lot of uncertainty that goes out the window there, right? And we don't have anymore. And again, I also feel like probably a lot of the geopolitical issues that he's sort of highlighting on national TV, probably he can fix that pretty easily too. I don't know, easily. I don't want to say that, but like, he probably can fix that too. And so like, at any point where he's like, okay, all systems go, boom, all three of those could be fixed in a heartbeat. And then what happens to markets? So that's why I'm like, I don't want to be fully in cash right now, but I also don't want to be fully like down the risk curve at the moment. So there's a bit of in between. You got to be playing for the next, let's call it few weeks to few months, probably. But again, let's just listen to Trump and Bessent. They're being pretty transparent with us on what they're doing.
I was trying to think last night. I was chatting with Sam, my wife, and telling her I generally don't talk about markets with her because she just gets scared. Is because she doesn't follow it every day. And so I said, baby, markets are tanking. It's bad out there. And instantly she started to freak out. Right? She's like, "Are we okay? Like, what's going on with her money?" And I was like, why am I so calm? Because like I'm in it every day and I'm super calm and I'm not having any issues sleeping. And what I realized is it's for a couple simple reasons. One, I'm an investor, not a trader. So timeline wise, I'm not concerned about whether this pull, if this is a pullback or this is a bear. I still believe that we are going to go up from here. I don't know if it's in a few months or if it's 12 months, but I don't really care because I'm a long-term investor here. I'm long on most of and I'm also mostly in the majors. So I don't have that fear of, hey, this token's never going to come back, right? Which I think is a legitimate fear for some people that went really far down the risk curve. For you, Kyle, how do you stay calm in these moments? What makes you able to sleep well when we see so many people in our community that are struggling right now and are having a difficult time?
I mean, it's one is writing, right? Like before I came on this episode last night, I was like, okay, I'm just going to write out my thesis. And so what I do, I just went and researched everything. I just looked at the charts, I looked at the data, and I just try to rationalize it all. I think a key thing is one of the problems that's happening right now is not only are markets tanking, but a lot of people are getting very emotional about what Trump is doing. They hate people get so angry over politics. They get so angry over Orange Man, and like people are losing their minds. And for me, it's like remove your emotions. Who cares what you think of Trump? Who cares what you think of whatever political views? None of it matters. The markets literally don't care about your views. And the more views and the more emotions you have in it, the worse you're going to do. And the more stress this is going to add to you, right? The other thing is like, you got to think about, are you an investor or are you a trader? Jay, you just said you're an investor. And so like, this isn't as big of a deal for you, right? What I find happens with a lot of people, and I know this because I used to do this a little bit as well when I first got into investing, which is, you think you're an investor when times are good. When the markets are green, you're like, I'm an investor. I'm long-term. I'm never going to sell this stuff. It feels so good. We're going to Valhalla. And then the markets tank and all of a sudden you're like, oh shit, I got to sell. I got to get out. Like this is going to zero. I got to get out right now. And so what does that mean? It means all of a sudden you became a trader, right? And here's the worst part about it. If you have a chart up on the screen here of December 8th or 7th is the green there. That's when we told everyone like, okay, if we think there's a pullback coming, if you're a trader, you would de-risk, you would sell. Okay. If you're an investor, you don't care. You might wait on dollar cost averaging that month and you might wait and move it to the month after when you get the pullback. Okay. But what happens here is now that we've tanked whatever it is, 30%, everyone's like, holy shit, I need to sell. I got to get out of the markets. And it's like, okay, well, if you're trying to be a trader, which means because you're selling now, this is the worst time to sell. Traders sold up there, not down here. And so now you're a terrible investor and you're a terrible trader. Well, that's a losing strategy, right? So which one are you, right? If you want to be a trader, that's fine. We gave you the signal to sell, but we said we're investors, so we didn't sell, right? We said, hey, we're gonna keep doing as we do. We don't care. We're here for the long term. And so which one are you? Because if you're an investor, then this is actually a really good opportunity for you to be buying, in my opinion, over the next few months. When I think back of sort of my story, when I first started buying crypto, a few months into it or a little bit into it, all of a sudden we had the COVID crash. Right. I was in 2019 and then all of a sudden the COVID crash happened early 2020 and Bitcoin went to $3,000 and ETH went to $150. Man, what a dream. Right. And I was like, holy shit, what just happened? Like everything I had just been buying before that just got cut in 50% in like 3 days. And I didn't really have strong conviction in this stuff yet. And I was like, you know what? I got to learn what's going on here. And I just like locked myself in a room and I studied and I was like, screw it. I'm going all in here. And I just kept buying and I kept buying and I kept buying. And now I look back and I'm like, holy shit, what an amazing opportunity that was. That was the scariest moment ever for most people in this world. But I just dug in, I got conviction and I made sure I was buying assets that like were smart and like had made sense long term. And so even during the bear market that came, which I was always expecting there was going to be one in 2022, I didn't sell then. But again, I was holding on to these good assets that I knew, like, even if we have a bear market, I'll buy more of it and it'll go up even more. And so, like, as I said, the longer that you hold on to assets, the more chance you have of winning and succeeding, right? The shorter you hold on to assets, the more chance you have of losing and failing and losing money, right? And so again, just like in these moments, I've said many times on the show, 95% of my portfolio is in majors. And so, like, yeah, some of my majors are down really bad. Coinbase got wrecked, but I don't care because I know that the thing's coming back, right? I know Bitcoin's coming back. I know ETH and Solana are coming back. So, like, I'm not overly concerned. Now, if I put all my money into whatever shitcoin back in 2020 when the markets collapsed, I might be sitting here telling a whole different story, right? I might not even be in this industry anymore, which is what I think happens to a lot of people. So you got to really decide, are you an investor or a trader? And then you got to stick to that during the tough times, right? Because I can tell you right now, I have stuck to it during multiple 50% or more pullbacks, whether it's the full bear market or the quick pullbacks. One thing to remember, guys, we had a 50% pullback in Bitcoin in 2021 and one in 2020. That was the middle of the bull market, and twice we had a 50% pullback in Bitcoin, right? And we've only 30% right now. And so again, I see these as opportunities, whether I'm right and it's only a 3-month pullback and Felix is right around a 3-month pullback, or I see this as an opportunity, even if Michael's right, right? Because you can just keep buying on the way down, and you got to go long term. Because if you didn't sell the top, well, you missed it. But you're not a trader. Just think more long term here, because again, this all makes sense in the long term that this is going to come back.
Mm-hmm. Yeah, I think so. Just to highlight, you mentioned Michael and Felix. Michael's view was that there would be a 9 to 12 month bear market. Felix's view was more of a short term, 3 to 4 month bear, and then a sharp recovery is what he thinks is coming. A lot of people asking, what are you buying right now? And what are you thinking about when you look at, if you did have cash on the sidelines, or you are DCAing, how are you setting that up?
Yeah. So first, I'm definitely buying. And I'm not going to say which tokens I'm buying right now, because I'm going to leave that for our pro report that comes out on Saturday to our pro members. And the reason is, this whole thesis I just did here was a pro report that's coming out on Saturday. And I've kind of front run our pro members and came out here and did it on the podcast, mainly because I wanted everyone to know this. And I wanted pro members to get this sooner than later, so we don't make any mistakes throughout the week. But I'm going to keep my tokens that I'm buying and the assets that I'm buying, dollar cost averaging into over this pullback to that. So if you're not yet a pro member, go pro. You can get it there. Now, I won't just leave you at that. Don't worry. But I will tell you this. I don't think right now is the time to be buying. I see a lot of comments here about different altcoins. This is not the time to be buying altcoins, guys. It is not. As I said, Bitcoin could go down to 70. Now, that's only a 10% drop further. But what do you think that means for the altcoins? Okay. It means a lot further. I know altcoins are down like 60, 70, 80, 90%. Well, they can do it again. They can definitely do it again. And especially if we did go into a bear market, like what Michael's saying, there's a good chance most of those don't come back ever, right? So, like, should you be loading up on those right now? Probably not. Even the ones that we've been bullish on, I don't think you should be loading up on those. What I think you should be doing is learning which ones you want to get, keeping an eye on the charts, showing which ones are not really tanking as much as the others, which ones actually are holding quite strong, and wait for some kind of confirmation. Wait until we see that we're getting to the other side. Then you might want to go and buy those. Now, in the interim, rather than buying those, I do think it's a good idea to add onto majors right now, right? And I do think there's an idea to be dollar cost averaging there for the time being. But again, doesn't need to happen right away. I think you can take a bit of patience here and kind of sit on it and kind of just do it slowly and just see if you can happen to, if it goes below into the 70s, you should be buying for sure. And so I'd be doing it patiently and just slowly, maybe every week or every day or whatever you want to do, rather than just like lump sum today.
Mm-hmm. Mm-hmm. Yeah, don't try to catch a falling knife, because who knows
Exactly.
where the bottom is right now. But as you said, you feel pretty good about if we get below 70 Bitcoin, in that anything in the below 70 range is like, wow, immediate buy. Like there's a lot of support at that level.
Yeah. And I think the big thing you want to look at, guys, right now is like, keep an eye on liquidity, keep an eye on the ISM, and keep an eye on rates, right? That's the main thing I'd be keeping an eye on right now. Rates, we want to see that go down, right? If it stays up, that might be a bit of a problem. It means we're going to need more of a growth scare. If that starts to come down into the threes, okay, they might be done here. That might be good for them. Okay. So that's 1 year. I'd be looking at the 10-year or obviously looking at the Fed if they're going to be cutting rates. Of course, though, if those rates are skyrocketing down because we're in a recession, like you got to get out, right? Or you just hold through it if you have majors, right? But you definitely don't want to be holding alts in that world. So I'm looking at that. The ISM, we want to see that go back up, but I imagine it's going to be stuck around where it is now, right? Again, we're trying to get literally the ISM, the business cycle, to come back a bit. We just passed above 50. We were all excited about that. And Trump was like, shit, not yet. We got to wait. So they're pulling that back down. So I would expect another month or two of that maybe staying as is or going a bit lower. That would be completely normal, completely fine. But then by, let's say June, May, we want to see that start to go up again. If we are, that's a really good sign. Liquidity is the other one. I know there's a lot of different takes on liquidity right now. Felix and I think Michael had very different takes on it. I do agree with both of them that the Fed's not going to give any liquidity here, right? We've got to get rates to zero before QE starts. Now, one good thing, QT is ending, quantitative tightening. That's very likely ending. And so that's good. But remember, the big thing here right now is the dollar is going down, which means China can start to print. And China's economy is crushed right now, right? And if you remember back to 2017, that bull market, the Fed did not do QE. The Fed was not printing money. Interest rates were rising during that bull market. It was basically all China. And so I think that can be the case here. I know Felix yesterday said he's not sure. They haven't really shown they're going to do it. And I don't think they need to show they're going to do it. I think they'll do it when they're ready to do it. And I think that they're getting ready pretty soon. So I actually think, I don't know if you have the chart of the comparison of Trump's liquidity from last cycle to now. It's one of the last charts in the pro report. Yeah. This is one of the ones that we've shown before. And a lot of people are thinking, well, this isn't going to happen this time around because Trump doesn't care about this time around. Look, he doesn't care about markets this time around. Trump cares about markets. I'm telling you this right now. He's bluffing to you right now that he doesn't care about markets because he needs the markets to go down. But ultimately, I think China and other areas of the US, whether it's through the banking or it's through the TGA, or maybe at some point we get some sort of form of QE, probably won't be called QE, but I think liquidity is coming regardless because it basically has to. They still need to refinance $9 trillion that they can't afford, right? Trump or Elon's not going to fix that. And so right now, my base case is this still happens. This is still the outlook of liquidity over the next 2 years, which is kind of crazy. And I know it doesn't seem like it will, but like, man, no one said there was going to be a pullback in liquidity at the end of last year and it happened. No one said there's going to be liquidity coming back up and it's happening. It's not going to be a straight line up and to the right. We'll probably be very volatile here. But again, this is still my base case. And until I see this breakdown or reason that it's not going to happen, this is the main thing that I'm really looking at is liquidity. And I think that's what you guys got to keep your eyes on to tell you when we're going back into risk on environment.
Absolutely fantastic, Kyle. Thanks for joining us and giving us all this alpha and really sharing so much with us today and giving us a nice deep breath of, hey, maybe it's not the panic that we all have. Maintaining the mental and the emotional side is so difficult during these times. I want to know, everybody listening in, you a bull or you a bear? Throw in the comments, bull or bear. Let me know right now. I want to see, we got more bears or more bulls right now. Also, if you guys want to hang out with Kyle and I in person, we are going to be in Toronto at Consensus in May 14th to 16th. Yeah, Kyle's wearing his Toronto hat right now. It's going to be an awesome crypto event. I'm actually going to be interviewing Kyle live on stage, doing a live episode at that show. So if you guys want to come out and meet us, we got a discount for you in the show notes. So click that link. You can save $350 on your ticket. Also, everybody, this goes without saying. I feel like I shouldn't need to say this, but none of this is financial advice. This is for informational and educational purposes only. All right. It's not legal advice. It's not tax advice. It's not financial advice. All of our views are our own, and we do not pretend to represent professional financial advice. That is not us. We're not financial advisors. So please take your own judgment, do your own research, and whatever you do with your money, know that there's always risk involved. Stay informed, stay safe out there, everybody. Have yourself a wicked awesome day. We'll see you guys back again tomorrow.